You don't need indicators, you need better beliefs. Most traders lost not because of strategy, but because of mindset. Trading in the zone master the market with confidence, discipline, and the winning attitude. Game of probabilities and self control, and that achieving consistent success requires a mental shift to think like a professional casino owner. Biggest lie in trading. Most traders believe success comes from finding a perfect trading strategy or the right market signal, but obsess over indicators, charting patterns, and economic news. When they lose, they blame the market or the system. The true secret for success are not in the market, they are in your mind. The reason 95% traders lose in that they fail to develop the psychological skills necessary to trade a system consistently. So, the psychology for achieving trading in the zone, mastering the five fundamental truths of trading to eliminate fear and create consistent profits. Thinking in probabilities, the professional's mindset. The amateur trader seeks uncertainty, the professionals accept risk. This is the fundamental shift. The problem of unpredictable. The market is an environment of unpredictable outcomes. Any single trade can do anything. The untrained mind seeking uncertainty becomes paralyzed by fear of loss or excited by hope of quick gain. The casino analogy. Successful trading is like running casino. A casino knows it will lose on some hands, but it profit consistently because it plays the edge over a large number of trials. The casino does not panic over a single loss. The five fundamental truths to think like a casino. You must adopt these five beliefs, which form the foundation of trading in the zone. Anything can happen. You don't need to know what's going to happen next to make money. There is a random distribution between wins and losses for any given set of variables. An edge is nothing more than a indication of higher probability of one thing happening over another. Every movement in the market is unique. Stop asking, will this trade works? Start asking, what is my probability edge and how much am I willing to risk? Eliminating emotional risk. Fear and greed are the results of prejudging the market and not accepting risk. The fear and greed trap. Fear causes you cut winning trades short and hold losing trades too long. Greed makes you take too much size or enter trades without your system. Both are caused by the belief that you know what the market is supposed to do. Taking responsibility. You must take 100% responsibility for everything that happens in your trading. This does not mean you are always a fault for loss, but you are always responsible for your risk control and your response to the outcome. When you stop blaming the market, you gain control. The need for boundaries. A professional traders use mechanical rules to define risk before the trade is entered. This removes the emotional pressure of having to make a decision while the market is moving against you. The path to consistency and self defined. Consistency comes from not consistent winnings, but from consistently thinking in probabilities. Establishing a trading framework. You need a mental framework that allows you to operate without fear. This framework has two parts: objective edge definition. You must have a clearly defined edge that gives you a higher probability of success over many trades, a technical pattern that works 60% of the time. The risk acceptance. You must truly accept that your loss is part of the cost of doing business. Each loss is simply statistical contribution to the overall profitability of your hedge. Trading in the zone is a fundamental state where you execute your system flawlessly, accept all risk, feel no emotional pain from a loss, knowing it's just a random variable in a sequence of trades. Actionable mind shift and mindset. Stop trying to predict the market. Start learning to predict your own behavior. Success is about mastering five truths. accepting the random nature of outcomes, and placing the mechanical stop loss to define your risk. For your next 10 trade, focus on flawless execution of your entry, stop loss, and exit rules. Do not focus on outcome. Treat the loss as a simple cost of finding the next profitable trade. So, what is the one bad habits you will eliminate today by accepting that you don't need to know what's going to be happen next? Share your comments in the traders how to think probabilistically, eliminate fear, and execute trades with clarity. It is not about predicting market, it's about mastering your beliefs and behaviors. You don't need better indicators, you need better beliefs. Introduce the idea. Most traders lose not because of strategy, because of mindset. Psychology of trading. Markets are unpredictable. Your mind must be stable. Fear, hope, and greed distort perception. The consistency you seek in your mind, not the market. Belief system and market blocks. Your beliefs shape your reactions. Limiting beliefs lead to hesitation and self sabotage. Identify and challenge beliefs that cause emotional conflict. Thinking in probabilities. Each trade is just one event in a series. Accept uncertainty and focus on execution. A coin toss mindset concedes process over outcome. What it feels like calm, focused, and emotionally detached. No fear, no hesitation, just flow. In the zone, you trust yourself and the process. Building confidence and discipline. Confidence comes from following your rules. Discipline is the bridge between strategy and results. Use affirmations and journaling to reinforce mental clarity. Trading mastery is not about control, it's about surrendering to the process. Start journaling and adopt a probabilistic mindset today.